Well, hi there folks, it's Matt Hasten here looking at this week's property market as we close out the month of February, and of course summer here in Australia, and what a month it has been for the property market. We started with a surge forward of new listings coming onto the market after the holiday period, and there were some sensational headlines, particularly around the auction market, that were propagated by the media. I've got some of those examples here. Auction market surges forward on rate cut expectations driving buyers. The auction market sets a cracking pace, and the auction market sees a robust start. Now, what was very interesting about these headlines is it felt like it was a bit of a disconnect by what we were seeing in the market and also the results of the true auction clearance rate. We can see here, bringing up that data, in the first week of February, the auction clearance rate was sitting just around 55%. It then jumped up to 58%, and the market and the media really got some hype about that. Then the following week it dropped down again to around 57%, and then last week it fell again, sitting at 55% from the largest auction weekend with 1,403 properties that went under the hammer. So what we were really seeing, and we reported on this last week, is that blue ribbon quality property was still selling very well, but the rest of the market was more evenly balanced, and if anything was quite delicate, with a very cautionary buy pool. And we can understand why there's a lot of enthusiasm at the beginning of the property year. Buyers have had a break, they're re-energized, they start to look at this new wave of listings that have come online, and they immediately start to make offers and jump on those fresh listings. And then also inflation data came through a little lower than expected, and that kicked off some conversations that a rate cut could be imminent. Then the RBA board meeting occurred, and their meeting minutes were released, and they were very cautious about inflation, saying the job is not yet done, and also left the door open that they're not ruling out the potential of another cash rate increase. Also this week we've seen some more inflation data, and the two key things that the RBA are going to be looking at is rents are continuing to surge forward around the country. They're up over 7.2%, even higher here in Sydney, 14% growth, and that's pretty quick. And also building costs, whilst they've come down, they're still quite high, 5% above the norm. And these two things around the economy can contribute up to 1% on headline inflation. Now, as a result of this shifting and delicate economy, two of the major banks are the first to pull the trigger and downgrade their property price forecasts for Sydney. The first one, ANZ Bank. They were previously forecasting growth of 6 to 7% this year in Sydney. That's now been downgraded to 4 to 5%, still growth, but downgraded to 4 to 5%. And NAB, they've moved from 6% growth down to 4.5% growth. So it's very interesting as we start to turn a corner into March. Now, as I've been reporting over the last couple of weeks, blue ribbon properties are continuing to sell well. They're setting the pace of the market, and there are none more spectacular than this property that's just been listed at 118 Henley Marine Drive in Drummoyne. Now, this is a magnificent home, fairly significant in its size, in one of these dress circle locations in Drummoyne. It offers 6 bedrooms, 5 bathrooms, garaging for up to 4 cars, a beautiful pool, and widespread views. Now, this property is going to auction in the Cobden Hasten offices in Drummoyne on March 16. It has a guide of $9.8 million. Now, if you're interested in this magnificent family home, please speak with the listing agent, Daniel Patterson. So folks, that's what's going down in and around the market as we close off February. Thanks so much for watching, and I'll catch you all next week.